points higher to close at 242.55. We're going to share their insight on these and other market trends are two of our regular expert analysts, Walt Hackney and Doug Jackson. Gentlemen, welcome back.
Doug, how are you doing?
Well, I'm okay. I'm telling you what, a lot of people wonder about these markets. Let's start first, Doug. Let's start with the wheat market first. Softer week for both wheat and corn.
Well, we have some private crop estimates. We put out our numbers. Sparks followed up later in the week. Both numbers were larger than the last USDA number. Our number's near 10.1. Sparks was slightly lower than that. Mark, you know, the idea is, again, that we may rebuild stocks slightly this year. This is something we've given up on, of course, a few months ago when people were using yield estimates much lower. Now people are experiencing much better than expected yields in almost all parts of the country. So the market's really accepting the idea that USDA next Friday will be a little larger in their report, maybe subsequently a little larger in November. You've got some people who still think the crop could be 10.2 billion. Of course, we have a demand base close to 10 billion bushels, so we're only talking about stocks maybe building 100 or 200 million. Really, this is all relatively known, relatively discounted in the market. Unless we get a total shock in one of these upcoming government crop reports, we're going to be in a 5 or 10 cent range on corn, frankly, Mark, for maybe 6 months. A situation that, you know, is relatively imbalanced, still plenty of stocks, harvest ahead of us, and just not a very exciting situation. Maybe of the three major grains, the corn market has turned out to be, for the time being, the least interesting. At some point down the road, if China starts to drop out of the corn export picture, that would be the catalyst for a big move up, but people are tired of trying to outguess that. We don't know what their inventories are. That's probably the most interesting thing to watch in the next 6 months. Beyond that, of course, ethanol demand continues to increase year after year, 200 million bushels per year now, year after year. That'll give us a 10.2, 10.3 billion demand base next year. It'll still require perfect weather, plenty of production, any kind of a weather problem or bullish corn long term, but it's going to be a case where producers holding inventory are just going to have to be patient. The downside may be limited, but so is the upside for the time being.
All right. For a corn producer out there who maybe is looking at reduced yields, maybe not quite sure what to do, maybe a softening as we, especially on basis as we go through, so maybe an LDP to pick up here?
We're just playing in that vicinity here. We're not going to look for any big price discount to loan, maybe 5 or 10 cents. Take it at harvest when the basis is cheapest. That's going to be the play as it normally is and will be again this year.
All right. I want to talk a little bit about wheat and the wheat market, again, put under some pressure, but it seems like we're hearing forecasters saying we could see this market strengthen.
The wheat market's an interesting situation, Mark. This week we confirmed a 1 million ton larger crop in Canada, certainly well above last year's drought-reduced levels. The trade suspects that we'll see an Australian crop that's even larger, and the Australian crop this year will be more than double the drought-reduced levels of a year ago. So we have a dramatic shift this year. Western, major exporter or Western Hemisphere supplies will rebound sharply, while Eastern Europe and Russian supplies are collapsing. Of course, it was those inventories that muted the impact of the short crops here a year ago. So a tremendous trade shift in the world, and yet really, one may be offsetting the other. Europe, of course, had a drought. The question is how much will they have to import, or how will they deal with that drought situation? Will U.S. wheat work into those markets? 10 cents down from here, we think wheat will move into Europe. People sort of have the perception that that's sort of the lower end of price possibilities. But on the other hand, with more competition around the world now from Australia and Canada and others, maybe not the big bullish situation we thought it was going to be either. The funds are loaded up, long nearly 35,000 contracts in Chicago. They're about maxed out. We may just be in sort of a choppy 30-cent sideways market back and forth here for the foreseeable future. Relatively good planting conditions, relatively good moisture conditions in the U.S. going into winter planting. Again, keeps people sort of unenthused. But world stocks are still declining. We've had 4 years of production below usage in the world, Mark. We still don't have any room for anything other than good weather next year. Maybe long-term, a bullish situation if you have a weather problem, but we're going to have to get that in our sights, and it's not there right now.
All right. Well, let's talk about the one that has been so volatile this week, and that's certainly been the soybean market. Again, another dramatic move, another 20 cents up over $7. Couldn't sustain it. And what's ahead for beans there?
The soybean market, Mark, is very complicated. We're learning the lessons this year, of course, that this is a bi-hemispheric supply situation. And the market's going to be dealing with a number of imponderables here for for quite a period of time. Of course, this week the market was disappointed to some degree on Friday with a private analyst estimate that came out, and even though it was lower than the previous government number, it wasn't as low as people thought, and then we sold off about 20 cents. The bigger picture market, to try to simplify it, is that U.S. production is going to be down 4 or 5 million tons. But and it isn't a rationing or demand diverting situation. But at the same time, South American production continue to expand acres very rapidly, may be up 8 or 9 million tons. The joke here is that we actually could build inventories of soybeans in the world next year by next spring. But the question will be, how do we shift demand from the U.S. to South America? Can they have the logistical capacity to ship and cover our shortages? A very nervous market. We may have put a top in, though, late this week, sell into the rally that's associated with the October crop report next week.
All right, sell into the rally. Good ideas. All right, now let's move over and talk about livestock and talk about